The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So our stock of the day is Xero. It is expanding in the United States with a $3.9 billion acquisition of Melio, a B2B payment platform focusing on small and medium-sized businesses. Xero is saying this will address customer needs for a combined payments and accounting platform, and forecast group revenue will double by FY28 as a result of the acquisition. The cash and stock deal would also see Melio receiving up to 770 million Aussie as part of deferrals and rollovers laid out over the next 3 years. Xero will fund the transaction through a $1.85 billion institutional placement and the rest in Xero's cash, a credit facility and Xero script issued to Melio shareholders. All right, so let's get across and, well, let's get an opinion from our experts. Henry, what do you make of this acquisition?
I'm not sure, to be honest. I was reading in the Fin Review that the CEO, who only took over a couple of years ago, has done an astonishingly great job. In the past, Xero had been pursuing growth in the US with alacrity and certainly throwing a lot of money at it. And the comment from the AFR was that they'd spent 30 million New Zealand dollars every year over the last 10 years to grow their US business, which, 300 million bucks is in New Zealand dollars to get 396,000 subscribers, they were saying. And now they're paying quite a lot of money for 80,000 subscribers. So it's kind of, it doesn't look the cheapest deal in the world, I have to say. The brokers, of course, are going to probably like it. It has been on an astonishing run. It's a tech stock, of course. And as usual with tech stocks here, they're a rarity. And up till this deal, everyone was pretty keen on Xero with sort of close to $200 price targets, and it has run very hard. I think I'm probably a bit of a hold now. I'd like to wait and see how the dust settles, but I worked out they paid $757 per subscriber that they had in the US over that 10-year period. They're now paying an awful lot more for those 80,000 new subscribers. So, that is quite a lot of money. What's it? 3.9 billion in terms of that. So 2.5 billion US. It's a nice, easy round number, isn't it? So I guess that the jury is out, but this is, I guess, one of those things that says company maker. There's also a lot of egos at play, no doubt, because the management of Melio are going to be staying on, and there's progress payments as well. So that will take some melding together of those egos and waiting for everyone to fall out. So for me, this is a hold and wait and see, I guess, especially with this big capital raising as well. So I'm not rushing out to buy this one. It's obviously a strategic fit. They're talking about how good it is. But when you look at, the rally in the stock has been predicated basically on the fact that they hadn't been chucking huge amounts of money at growing US market share. Now they've just chucked 2.5 billion US at growing it in one big gulp, and that comes with risk. So I think for me, it's probably an avoid for the time being and let it settle.
All right. Well, we're calling that a hold then from you. So Andrew, obviously, when you talk about these acquisitions, it's all about those synergies. I mean, you're seeing it here.
Yeah, and I should disclose in my self-managed super fund, this is the only direct equity that I own. All the others are either ETFs or LICs. So certainly a big fan of Xero from quite a while away. I guess the key thing for me with Xero is, and Henry's right, like they're paying a bucket load of money for a small number of subscribers. But what we've got to remember is the ARPU, not the character from The Simpsons, for the average revenue per user for those playing at home. For Xero's around $40, $45 a month they're paying. Whereas for the new acquisition, it's around $437. So it's a substantial difference. And if you look at Reckon in the US, they've got quite a good model in cross-selling services. So the great promise with Xero is they've obviously absolutely nailed it in New Zealand. Similarly, they've done very well here in Australia, and even getting some traction in the UK. Where they haven't had traction in the past is the US. They had that former head of PayPal for a little while. That didn't quite work out. And so now this is sort of really potentially a company making acquisition for them. But as we also know, with due respect to Australian companies going offshore and doing a great job in the US, it's not exactly a long list of companies that have been able to do it. So in the short term, I agree with Henry, it's a hold, simply because that share purchase plan is going to put some pressure on the share price, $176 a share. And you probably want to see how it's going to wash out over the next 6 to 9 months post-acquisition. But if they can get it right, it really could be a company making acquisition. But right here, right now, today, it's a hold.
That is a double hold for our stock of the day, Xero.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.